What's up, you guys? I'm Cullum Costello. Welcome to the channel. Today's video, we'll be talking about Very Good Food Company. Very Good Food Company is a plant-based food company out of Canada, and there's some very good reasons why I think this one could easily 10x over time. So with that being said, you guys, I'm not a financial advisor, and these are for fun and educational purposes only, so please do your own research. Let's get into the video. The Very Good Food Company is an emerging plant-based food technology company that designs, develops, produces, distributes, and sells a variety of plant-based meat and other food alternatives. Their mission is to employ plant-based food technology to create products that are delicious while maintaining a wholesome, neutral profile. The Very Good Food Company, they believe that making good choices doesn't mean sacrificing flavor or giving up the things you love. That's why they're hell-bent on developing and manufacturing a range of plant-based products that will satisfy your taste buds and nourish your body. Today we'll be looking at the Very Good Food Company's investor presentation, we'll look at their balance sheet, and we'll see why Pamela-Anderson is involved with Very Good Food Company. You guys, as always, I'll leave the links in the description down below for all these sources so you can check them out yourselves. Check out the estimated global plant-based meat market. In 2018, it's at $10 billion. Well, by 2026, it's projected to reach almost $31 billion, growing at an expected compound annual growth rate of 14.8%.
Billion?
Of course, these are just forward-looking statements and estimations, but the plant-based food trend has caught on drastically in the last couple of years. If the Very Good Food Company can get a good portion of this market share, then this will be a very good investment for years to come. Probably their largest competitor and the biggest name in the plant-based food industry is a company called Beyond Meat. This company was founded back in 2009, and it made its IPO back in May of 2019. Let's take a look and see what Beyond Meat's trading at and see how they've done since they entered the public market. Here we are on Yahoo Finance under ticker symbol BYND for Beyond Meat. We can see it's trading at $152.57, give or take. The market's open right now, so it's fluctuating. Well, about 6 months ago, Beyond Meat was not trading at this level. It was trading about half this level. So this plant-based food trend has taken off substantially. So if the Very Good Food Company can follow in these footsteps or, get half of this revenue, then it's a very good situation if you're invested in this one. The Very Good Food Company has seen rapid revenue growth with their e-commerce online shopping orders booming and their strategic marketing plans. Let's take a look at one of those strategic marketing plans. So if you remember the show Baywatch, then you remember Pamela-Anderson. Well, Pamela-Anderson has a foundation that supports organizations and individuals that stand on the front lines in the protection of human, animal, and environmental rights. Oh yeah, Baywatch. I used to watch that because I was interested in being a lifeguard. The Very Good Food Company ran a promotion in October that if you made a purchase and you used the code PAMELA, you received 10% off of your purchase, and a percentage of that went to the proceeds of the Pamela Foundation. Let's take a look at a company snapshot to see how they're poised for substantial growth. Sustainable rapid revenue growth in the e-commerce channel. They have a strong social media presence resonating with their target customers, which we'll look at their customers in a second. But you guys, Q1 2020, they secured their second location in Vancouver. In Q3 2020, they secured their third location in California, which is huge. They're moving into the US for production. In Q2 of 20, they had a revenue of $1.1 million, which is 395% growth year over year. They had an industry-leading margin of 40% compared to Beyond Meat at 29.7%. We saw what Beyond Meat is trading for earlier, and it's up there. Well, the Very Good Food Company is a pretty cheap price, and we'll look at that in a second. But first, let's look at more of their strategic plans for growth. One of the things I really like is they secured a Vancouver marketing, restaurant, and manufacturing center. This manufacturing and restaurant facility creates a social and brand experience. The goal here is to increase production capacity in a test kitchen and create an engaging food or drink hub and a social media event venue. So if you go on social media and check out the plant-based food trend, you guys, it's huge. So they have this social hub where they can announce these, events that are going to be going on, and the people can go down to this hub and check out their brand. So in my opinion, that's a very unique way of creating a brand and a cool way of, creating a customer base and interaction. Another thing I really like is how they moved into the US, securing this location in California. This is a 25,000 square foot facility capable of producing 550,000 pounds per week. This is an increase of 68 times their current production volume.
Like spaghetti and meatballs, why don't you get the hell out?
Now, I really like where this company's going. It's a great growth story. But with that growth and potential comes a lot of risk. So do not put in any money that you can't afford to lose. As in my opinion, if you have money to invest in this one, which I'm not invested in this one yet, I do want to get invested in it, but right now I think the price is a little too high. I think we could have a pullback, but that's just my opinion, and I'm actually hoping for that. We'll look at the price in a second. We'll also look at another thing I really like, which is some of the partners they already have. So, great growth story, yes, but risky, yes also. With the risk comes a great reward. Let's look at the price. Here we are on Yahoo Finance under ticker symbol VRYYF for the Very Good Food Company, and you can see it's trading at about $2.37, which the past couple days, you guys, this one's ran up a lot. So that's why I say I think it's a little too expensive right now. Not that I don't think it's worth this price. I'm just hoping for a little bit of a pullback, because when it runs up that quick, hopefully some people will get excited that they made some quick money and sell out a little bit. But who knows? This one's got a lot of hype behind it, and I really like the growth potential in this one. I like the whole story. I think the trend's great. I think the whole social media thing and just the following behind it, in my opinion, it's a great opportunity to be in. So it's had a little bit of a run up in the past few days. I'm waiting for it to cool off, and maybe I'll start a position. This hurts seeing it at $2.37 because I saw this a couple months ago and it was under $1, but I never jumped on it. Let's take a look at some of their partnerships, as I really like where they're going with their partnerships also. You can see here that the Very Good Food Company has some great partners like that of Whole Foods and Red Barn Market. With recent production increases, they've confirmed product placement with 112 partners, including nationally positioned retailers. They use these sale partnerships to drive customer awareness, acquisition, and revenue scaling. Now that we looked at the investor presentation, let's take a look at the balance sheet and check out the financial situation. Also, you guys, if you haven't joined the family, well, hit that subscribe button down below. We're always talking about ways to make your money work for you and grow over time. Here's the balance sheet for the Very Good Food Company, and what I like to do to real quick, just add up their cash and short-term investments. Then if they have long-term investments, I add those up. Then I add up their short-term debt and their long-term debt, and I see how it stands up against each other. You can also take the total assets and the total liabilities and add and subtract those two and find their equity. So if we look at cash and short-term investments, we can see that they have $405,610. They don't have any long-term investments, so right here is their short-term debt and current portion of the long-term debt, and that's $495,695. So that pretty much balances up with their cash pile. So that's not a bad thing. It's not a very, very good thing. But like I said, this is a very young company. It's a small cap company. And, they have to grow. They're going to grow for many, many years. So you got to, if you're investing in a risky growth company, that's something to expect. And it's not that bad. Their long-term debt is $949,313. Well, that was the Very Good Food Company, and in my opinion, it's a great growth story, and on a pullback, I'm hoping to jump into it. So what do you guys think? In the comment section down below, leave me a comment, let me know what you think of the Very Good Food Company, let me know if you own some of it, or just let me know your favorite stock. Till next time, you guys, thank you for tuning in. I'm Cullum Costello. Now hit that subscribe button, tap that thumbs up, and go out and get money.